Hi, it's Lee and welcome to the Tesla Economist. Seriously, I'm gone just a few weeks and this is what happens. Before I left, we just about had this stock back to 300. Then I go on holiday and now we're back at around 240. Well, I guess this stock isn't going to pump itself. So let's work this out. Firstly, Tesla will obviously recover again. Aside from the usual circumstances of financial crises or black swan events, the market has already shown us what it really thinks of Tesla and how it's too scared to miss out on what might be the greatest investment of a generation. Just do the FSD or robotaxi numbers and then you know. Not to mention the charismatic leader behind the wheel. Anyway, Tesla's stock price has taken a tumble, but in my opinion, there's nothing to worry about. Nothing has really changed with the company from where we were at about 300. Sure, the market is down a few percent or so, but Tesla is down around 20%. Why is that? Well, the main reason this all started was from the Q2 earnings call. We discovered that there will be some downtime with some of the factories, or potentially inferred as all the factories by some. It wasn't entirely clear, but we know it's multiple factories, as we were told, an international shutdown. This could mean just the Model 3 factories in Shanghai and Fremont, or it could mean something else. Either way, the market took it badly, despite earnings beating all estimates. But we have a P ratio of about 70. That means that Tesla's valuation is the total of 280 quarters at Q2's earnings rate. Yet the fact that Q3 will experience some downtime potentially knocked off 10 to 15% of the value of the company. How can one quarter create so much damage? Well, overreaction and manipulation, of course. We also have Zachary Kirkhorn sadly leaving as CFO after 13 years. There's plenty of speculation going around as to why that may have occurred, similar to when Andrej Karpathy left from being Tesla's leader for AI. Yet the company is still going and the AI aspects have never looked so good. But markets do not like any uncertainty. I would say, though, that the temporary shutdowns are the majority of the company valuation loss. However, this is potentially more reason to believe that there will be a Model 3 Highland update. The rumours were pointing to it being around this time of the year. This shutdown sounds like it is relatively big, and it is for a line upgrade. So why would Tesla be doing a relatively large line upgrade now if it wasn't for the Highland update? Even if it's not the Highland update, which I think about 75% of the investor community probably think is coming, then it will be a line upgrade of some other improvement, which will result in lower cost and faster production one way or another. But why would Tesla need faster production in Berlin or Texas? They're cell constrained there, not production speed constrained. The other theory I have, and as far as I know, I seem to be the only one with this theory, perhaps because I tend to follow cells and batteries more than most bulls, who seem to concentrate more on FSD. That just happens to be more of my angle when it comes to analysis, which is fine. It's good to get everyone's analysis from different angles. But we have some fairly substantial, tangible evidence of a brand new CATL cell and battery factory with a capacity of around 80 to 100 gigawatt hours a year of production that happens to be right next door to Giga Shanghai. Now, I think this is perhaps the most underrated item right now when it comes to Tesla, and I hear hardly anyone else discussing it. We do, however, hear a lot of Tesla-related press talk about the fact that the Model 3 may soon have a 66 kilowatt-hour battery instead of the current 60 kilowatt-hour battery. We also hear about CATL's new cell that happens to be 10% more energy dense than LFP. Now, I don't like to boast that much, but I'm actually quite good at math. And when I add 10% onto 60, I get 66 kilowatt hours. You can check it on a calculator if you don't believe me. Now, to me, if this factory is what I think it is, it's a bigger deal than the Cybertruck or Highland, at least for now. Although it might very well be part of Highland. It does, however, depend as to what phase the CATL factory is at and what the initial capacity will be. How much extra is this factory going to be worth to Tesla then? Well, we could go into some deep speculative analysis or do some quick back-of-the-napkin math. If each kilowatt hour is worth about $150 to Tesla, then we're looking at around $15 billion gross profit, perhaps an extra $13 billion net. Or, at a P ratio of 70, $910 billion, or twice the current valuation. But even if it's 50%, then that's not bad either. Like I was saying, it depends on what the current run rate of the CATL factory is, as it may even mean that Tesla are putting in these batteries in the Model Y and not just the Model 3. Perhaps the Model 3 and Y rear-wheel drive models will move over to these new cells. The Model 3 getting to about 300 miles of range, and the Y getting to about 260 or 270 miles rear-wheel drive. This is incredibly exciting. I like this kind of analysis because it's easily quantifiable, unlike FSD, which has absolutely no grounds to give any results or estimates possible. Even Elon got his estimates totally incorrect for the last 7 years. Whereas CATL are a proven battery manufacturer, and although this is a new chemistry they're using, it's not a new process, like dry battery electrode. So hopefully it will ramp fast and be a success. Anyway, there is that, hopefully, which I think is not priced in close to the potential. And then there's also everyone else's favourite, the big shiny Cybertruck, which for reference is only likely to produce about half the profit I just mentioned from the CATL factory, and it likely won't achieve that until sometime in 2025. But it doesn't matter. It's a showstopper. It will serve as a massive billboard driving on the roads as to how impressive Tesla is and what they're able to achieve. And maybe that's why Elon doesn't want to advertise. Now I really think Tesla should be spending between $250 and $500 million a year on advertising. It's getting insane how low cost some of these Model 3s are in some of the states in the US. Yet there are people buying Toyotas over them for more money. Toyotas, people, not even BMWs, of which Tesla beats hands down as well. Cybertruck is still on track. It lost a bit of momentum perhaps in the stock price as people believed it might have been launched this quarter, and now it seems likely it'll be Q4. But Elon can't back down from Q4. The market won't forgive him for pushing it another quarter, and he knows that. This car has been delayed too many times already. We also get to see some of Tesla's battery engineering going into this car, with the most energy-dense electric car cell without using silicon in the anode. Supposedly, at least. Perhaps we'll get a teardown sometime to see exactly what Tesla have achieved there. Wow, a Cybertruck teardown, can you imagine? As fascinating as it would be to watch, it's got to be almost painful. What a sacrilege to tear down a Cybertruck. Although it probably won't be that soon. I mean, who's going to give up their Cybertruck? Alright, back to cells and batteries, and if Tesla can get that Cybertruck cell into volume production, then the game has changed. Everything is back to being as good as it could have been, and I'm going to double down on options and leaps, not investment advice, more like a gambling tip where the odds are on your side. But it's still gambling, just like people can still lose their money in blackjack even when they count the cards. I really am not advising anyone to buy or trade options. I just generally talk about them to show the conviction I have in the company at various times. In fact, if the stock drops much more, then I'm going to take a position in options to cover Q4 deliveries. I have a feeling that Q4 will be good for deliveries, assuming that the lines are back up and running from this shutdown. There's too many potential events on the horizon that could make the stock shoot up. We even have Giga Nevada expansion making noise again, apparently a $3.6 billion upgrade. Now remember, Giga Texas cost $1.1 billion for the building alone, to give you some perspective. It's a good sign for 4680 cells if Tesla are about to build another 100 gigawatt hour a year there, and potentially means they're confident on the dry battery electrodes. And back of the napkin math again, if each of these cells are worth $250 a kilowatt hour, yes, much more than CATL's, as this is a high energy dense cell, they're made in America, so they have a subsidy, and they vertically integrated, then that becomes $25 billion gross profit a year, perhaps $20 billion net. We are into big numbers. Plus Cybertruck, then we're possibly at around $50 billion a year around the end of 2025, if it's running by then. And we didn't even include Mexico in that. At today's stock price, that is a PE ratio of 15. As long as Elon isn't dumping too many shares or we aren't in a major recession, then Tesla should be holding at least a PE of 50, and likely higher depending on the market's current thoughts on FSD, robotaxis, robots, or just AI in general. That's a decent upside. So to summarize, perhaps Tesla was getting a bit too high before earnings, partly with Cybertruck anticipation, but there hasn't been any major disaster to really take this much off the stock price. It feels like it's on a bit of a downward trajectory, so I'm going to wait a little to see if it gets any cheaper and then make a substantial purchase on some options. Maybe even some shares too. If I miss this dip, then so be it. It's not the end of the world, as it means my shares will have gone up anyway. So I can live with that. Let me know your thoughts in the comments below.